the last I saw it was like, I think the last that I saw it was around 1,200 in the parallel market. We have if fuel has not increased to like 600 and something naira per liter, and then you're seeing all the queues and people can't even fill up their tanks anymore. And it's just no headlines. Like whenever I go to supermarket now, the amount of money that I would have used to like fill up have a full cart, I have like half of that and I'm spending a little bit more. So it's like, it's real. We all feel it. And it's something that is very pressing and very real to everybody. Like the living situation in the country is something that we all have to be mindful of and just basically know how to navigate it if we want to like survive and come out strong, because right now we all have to survive. So to take us through these strategies, I have 4 distinguished speakers. You can see them here. I'll just do a quick intro to on them. So we have our first speaker, who is Mrs. Atinuke Egwuatu. She is the head of consumer loans at United Bank for Africa. Hello, Atinuke. You can just wave or say hello.
Hello, I'm happy to be here. Thanks for having me, Ngozi.
Thank you so much, Atinuke. And then we also have Ifeoma Okafor-Obi. She's the Director of Business Development at Aura by Transcorp Hotels. Hi, Ifeoma.
Hello.
Thank you so much for joining. And then we have Chinweugo Nwafor, who is the Head Internal Audit at Transcorp PLC. Hello, Chinweugo.
Hello, everyone. I'm happy to be here today.
Thank you, Chinweugo. And then we have Christian, our only guy on the panel. Hello, Christian Ubioworo, who is the head corporate segment at Heirs Insurance Group. Hi, Christian.
Hi, everyone. Good to be here.
Thank you. I think that your presence on the panel you give us like it's going to be like a very diverse view. We have like our females and we have you, the male, to give us your own strategies from the male point of view. So I'm looking forward to a very exciting conversation. So
no problem.
yeah, so I will just we'll just go right to it. I have a couple of questions which I'll ask our panelists, and then they would respond. But just to mention to all our attendees, if you have any questions while they are speaking, you can use the Q&A box. You can see at the bottom of your screen. You just type in your question, and then once they are done speaking, we'll just take all the questions individually and have our speakers attend to them. So questions that you have on tips, what they are going to say, and basically how you can manage your family's finances during these tough times. So I will just go right to asking our panelists. So I'm going to come to you, Ifeoma. Hi, Ifeoma, again. So basically, we have just already spoken about how hard it is really for people nowadays to basically just survive. It's like it's hard. Like the cost of living has gone up, but like some salaries have just gone up a little bit. Maybe it's not proportionate to like the current realities that we have in Nigeria. So it's like, we want to ask you, I've shared a bit of my own personal story, but I want to hear from you. How has this recent inflation affected your family's finances, and what are the actions that you have taken? So I want to hear your own personal story as to how this has affected you and what actions you and your family have taken to basically cushion the effect of the inflation. Thank you.
Okay, thank you for that question. So one of the things my husband and I did when we got married was to open mutual funds for our investment. We initially then, we're still young, we're not earning a lot. So we started with about 20,000 each, which was like 14,000 monthly then. And then by the end of our first year, we're sitting on about 550,000 plus a compound interest with it. And so, again, for us, it was more like put money aside so that you'll always have funding ahead of need. And, even when we're getting salary increases, we're just increasing the amount that we're putting in. So and then as we started having children, we'll split the funds to individual funds so that way we're kind of providing for each of the children. Now, with the recent inflation, we found that, and the youngest is in secondary school, you know how much school fees for secondary school is right now. We found out that the rate at which, we're putting it in was no longer commensurate with, the rate at which it was going out. So we had to ask ourselves, what can we do differently? So obviously, the first thing we did was to look at our family budget to say, how do we reduce costs, given that, things like food is a major cost for us because, we all need to eat, right? So we looked at, signed up for bulk buying, which significantly, because we eat a lot of fruits in our house and that costs quite a lot if you're just buying it single. And it enabled us to free some more money for investments. The second thing that we told ourselves, one thing we always promised ourselves was that we would, have a very good fund for the children's university so that way they can go to any school they want without that really breaking the bank. And we said, how do we still hold ourselves accountable to achieving that? And so that's when we now realized that, so like, take for instance, we now decided to invest in the Heirs insurance endowment plan because we found out that, in addition to, it kind of holds you accountable because you have this, this target that you have a number of years and you really can't pull the money out. But over and above that, we found out that, in addition to the yield and obviously the safety it gives in case if anything happens to us, but at the end of the year, you're able to submit your annual premium that you actually pay to the fund and then show that evidence of it to your tax manager to reclaim the tax portion of it. So, so the more you put into it, the more you can claim back tax, which you can then reinvest into mutual funds. Otherwise, you would have just gone to the government as tax. So these are some of the things we did, the bulk buying, diversifying our investment portfolio just to ensure that we're still able to achieve our dream that we started a long time ago to ensure that we're able to get the kids to very good school without having to break the banks. And then the last thing we're looking at now is, can we diversify again into dollar funds? Because, the way it's going, you really need to have, some foreign investment if you actually ever plan to have your kids abroad. So these are the things that we're doing. Thank you.
Okay, thank you so much, Ifeoma. I took down 3 points. The first is your family budget, and then registering for like an insurance plan that helped you basically save and plan for your kids' future. And then we also have diversifying into dollar funds. But I want to just speak a bit on the family budget because I know even though I'm not married yet, I don't personally have a budget for myself. So if you could just explain a little bit, like what does your budget cover? Like in plain terms, imagine I just want to start creating a budget for myself or for my family. What are the key things that I just have to note and how do you even stick to it? Just if you can just expatiate a bit on the family budget part so that people who are on the call who don't even have a family budget, once they leave this call, is something that they can take up and actually start doing.
Okay, so our plan was like about 20% of your income needs to go into whatever your shelter is, whether it's your own house that you're paying towards or something. So you put out 20%. Then we also then had, feeding, obviously based on the number that we have in the house, we're like 5 plus the kids and all. So we then had to bring out another 20% for feeding. So that already is 40%. Then obviously we have cars and all that. We put that. Then we also had flex money and investment money. The idea is that at the end of the budget, yes, you still have to live a life. So what we did was that we made sure that the total budget meant that we still had about 20% ring-fenced that must go into a type of investment. So if you take out the 20 for the feeding, 20 for the shelter, whatever it comes out to, that's 40 already, then 20 for the investment. It is the remaining 40 remaining that we then split into other things, fueling the car, and then what we then did was that we also then, like every quarter, we still managed to carve out something that goes into car fund because after a couple of years you have to reduce it, so easy. But we're a bit flexible too, so there's some months that we don't hit the 20% investment plan. Maybe we do like 15 or 10, especially when we've had huge repairs. We also then did things like so we're kind of heavy on insurance in my house. So apart from this that we just started, we always had the housing insurance because you just don't, what's in that can happen to you is that, there's a little fire or something, or even as something as mundane as there's an electrical spark and then all your electrical appliances goes, and then you find you have to replace it. So without insurance, at least you transfer some of that risk to someone else. So that's essentially what we've been able to achieve. So at any point in time, at least 15 to 20% goes into an investment portfolio.
Okay, thank you so much, Ifeoma. I have taken notes. It's something that I would try and see when I go back see how I can also budget and actually plan, because I feel like budgeting is so important now, just so that you have like clear ideas on how much you're spending, how much you're actually saving. If not, you're just like running wild like the wind. So I think that that's very important. Thank you for that. So just to reiterate, 20 for feeding, 20 for shelter, 20 for investment, 15 to 20 for investments, and we have 40 that goes to miscellaneous things like car funds, your flex, which is very, very important. Yeah, I think around all those other things. So, okay, that's very good. Thank you so much, Ifeoma. And then I would just also speak about the insurance. I hear you, because like in this time where cash is very hard to come by, imagine bashing your car or having that electrical spark or a fire in your house, and then you have to bring from this money that you have saved for feeding or for like your miscellaneous, your car funds and the rest is going to go into like repairing your house, or it might not even be enough. You probably have to go and take a loan or something like that. So I just think I also wanted to buttress the point of insurance, how important it is to have insurance. And the last point you made is diversifying your dollar funds. I will pack that for Atinuke, if she can also just like give us something once she's speaking, just so that people who are listening here just have an idea of how to like go ahead with dollar funds or dollar investments when it comes to UBA. So thank you so much, Ifeoma. I'm going to move to you, Chinweugo. So we've heard Ifeoma's we've heard her own strategies, what she's doing, but we also want to hear from you. What are your top 3 strategies for managing funds in your own home? It will also be nice to tell us how many you guys are, so that people can relate. Thank you.
Okay, thank you, Ngozi. I think that was an excellent question. So we are 3 majorly, and then we also have that's my husband, myself, and my son. And then we also have a caretaker. So we all stay within the house. So just a household of 4. Just like Ifeoma said rightly, the first thing to do is to have that budget where you documented what you have in terms of earnings, which could come from different, sources. So we know what we have every month. So we detail that out, and then what we need. Okay, so my top 3 strategies would be for electricity, for example, in terms of utilities, because if you're not careful, that is one area that would eat a lot of money. So you could have ACs on in different rooms, meanwhile people are not even there, or you have the TVs, all of them on and all of that. So you have to watch what your electricity bill is, coming up to at the end of the month. So what we then try to do is we sensitize everyone at home. So even to my son as well, you don't stay and leave the lights on if you don't need it, and just curtail those type of expenses. Another area would be in terms of data subscriptions, or let's say app subscriptions. You will be surprised how many apps we probably would have subscribed to. You would have picked Netflix, somebody else would have picked DSTV, another person would have picked Amazon Prime, and you're like, it's the same entertainment that we want to be entertained, right? So we have to sit down and then ask ourselves which one can cater to all levels. So my husband, who is into sports, or myself into entertainment and movies and all of that, and then my son, who likes certain kiddie programs. So whichever one works that can cater to all 3, we stick to that one. And we can, of course, once in a while switch and say, okay, this month we picked DSTV, next month we could try Amazon Prime, maybe for some particular movies that we want to catch on to. So that's another area we took seriously. Another part would be impulse buying. Right, where you go into a supermarket, your aim is probably just to get fruits, and the next thing you know, you're like, oh, this looks like a very beautiful flower pot. Oh, this one would look nice in my house. So you need to be able to be disciplined at that point in time to say, no, we're here to pick fruits. Fruits we shall buy, fruits we shall depart with. You will not, derail from that goal. And those are like typical strategies that help. So discipline is very important. Thank you.
Thank you so much, Chinweugo. As you were speaking, it just like really occurred to me, because I'm like, okay, I know electricity. Electricity is, I don't know, it's something else. It's like, yeah, purchasing lights meter, like the lights codes almost every like 2 weeks, something around that. And if you're not careful, it's something that can really eat into your budget. So I think that's very good. It just made me realize, remember when my mom was always shouting, turn off the lights. Who is in this room? Why is the light on? I think that we should all adopt and take a page out of our parents' books now and start hammering that really. And I think I really like your point on sensitization, because I think everybody needs to know that times are really not the same. So they need to be aware that we can't just leave lights on, we can't just do this. I think sensitization in the broader sense is something that is very, very important. I also took away your budget, which is something that's coming across now. So we all have to budget. I'm telling myself too, I need to budget so that we know the money that is coming in and what needs to go out. So yeah, thank you. And then the last one you spoke about was your data and your app subscriptions. It's like 247, we are online. We are on Instagram, we are on TikTok, we are on Facebook, we are sending emails, and we just don't know that these things, like, actually, if I think about how much I spend on renewing my data, it's something that needs to be watched. So thank you so much for drawing our attention to this, Chinweugo. So I would move from Chinweugo now and go to Christian, the only guy with us right now. So Christian, I want to find out, basically, with resources stress thing, we've spoken about how hard it is right now. How can families strike a balance between providing daily needs and saving for emergencies tomorrow? Because it's important that you live and you don't die in the present, but you still have to plan for your future. So how can we strike that balance to ensure that we are not just suffering ourselves in the present and then just keeping away everything for the future? I believe that there has to be a very good balance. So if you could just tell us how your strategies for that would help us out here.
Okay, thank you very much, Ngozi. Ifeoma and Chinweugo have done a good job. In fact, Ifeoma's one regarding having the budget and all that has actually sorted out problems, and then Chinweugo's one as well. So we understand that the economy is not doing well, and it's also affecting families. I have a family of 5. The person who helps my kids makes it 6. So it's sometimes tough in terms of trying to get everyone on board, but then it's something that has to be done. We're all going to struggle. So first off, I think is to have a budget, like you rightly said. And this budgeting thing has to be done with both parties. So not just one person trying to budget and that person just freelancing. No, husband and wife, please come together. Sort out, okay, what's happening here, what's happening there, where do we need to save money, how do we make it work? And it's not something that you just do once in a year and then forget about it. Sometimes you just have to keep doing it until it works, because the prices keep getting higher every time, and so you just need to put that in place. Another thing again is to prioritize expenses. You, like you rightly said, you talked about thinking futuristically, and that is how to go, to be honest, because most times we just want to get fed now, but just like Ifeoma said, planning for the future, the kids' education, and some of all those things. If whatever you're buying now is not going to help in the future, then why not just tone it down a bit? Setting up emergency fund is something that is very, very important as well, because yes, it's difficult to save, but then chairman used to say baby steps. So with baby steps, no matter how much or how little it is, just make some kind of savings in place. I think the experts will usually say that you should have about 3 months to 6 months emergency fund saved, so that if an eventuality happens, whatever happens, you are. In fact, I'll tell you a true story. A friend of mine lost his job. In fact, not that he quit the job because they stopped paying him salary. He was owing 2 months' salary. And the last time I saw him, I asked, I said, "How are you doing?" He said, "You know what? What's keeping me is my emergency funds." And so it's something that is very, very, very important and for you to have. We've talked about cutting down on expenses. Chinweugo spoke about turning off the lights. I think one other thing that I think we should actually practice is smart shopping, buying in bulk, buying in places that you know that the prices. Sometimes we go to those exorbitant places, and the other day I was talking about, I say, don't you think you need to get to the market more? Because sometimes we go to these big supermarkets and we buy, and you just buy an aesthetics, the building itself, because that's the cost. It's so high. But the same product is what is found in the market. And so once you go there, buy in bulk, keep them, and then you'll be able to, then us guys, meal planning, it's also something that should come. But sometimes we don't cook, but that's a way of saving money. If we are able to take food from home, that's a way of saving money. Energy consumption, transportation, reduction in the way we spend money on. If I'm talking about cars, I have 2 cars. In fact, for the last 1 month plus, my wife's car has been comatose because we now use one car to work. I drop her at the office and I come to work. I go to her office, I pick her, and I go back. So it's prior to that time where, oh, Frida, you drive, I leave by 5. No, we now leave at a time because you have to save money, And then insurance. I can't talk. In fact, I was so happy when Ifeoma talked about insurance because that has saved me a lot. When the unexpected happens, like you rightly said, Ngozi, it dips into your pocket. I remember there was a time I was going down the road after work, and then someone was driving one way, and they ran into me and damaged my headlight. And I know how much the insurance company paid, 100 and something thousand just to get that light fixed. So if that had come from my own pocket, I might have struggled at that time, but because there was insurance in place. So for what you know that you cannot actually handle, or you can handle, but it's going to eat deep into your pocket, why not let it go for an insurance? And the premiums are quite small, minimal premiums for this kind of events, eventualities when they happen. Then other way is to actually earn extra income. So part-time, look for part-time jobs, go online, look for stuff to do. Those times we spend when we get home, oh, you're tired and all that, just think of ways that you can actually help yourself in terms of earning extra income for yourself. Some jobs now are done online. So you can do that as well for yourself. I think another thing is actually to know your finance very well, because when you are not financially literate, then you will struggle, you suffer in some of those things. So go on YouTube, attend webinars like we're having right now, read books, learn how to prioritize your savings. Now we've learned about how you can budget accordingly, 20%, 20%, 20%. Some persons are not doing it. So if this opportunity was not there, you won't be able to have that, know about it. So why not read about it, study about it, learn? If you want to change or make something work, then invest in that knowledge. I think those are some of the steps that I think would help in these times.
Thank you, Christian. I saw you throwing jabs at me. That
not you.
How to budget. No problem. I've learned it today. No problem. All of you have spoken about budget, but I just wanted to dig deeper for your emergency funds. What are the strategies you use for your own emergency funds? Are you taking part in any kind of investments, or do you save? Do you have a bank account where you put those funds that you save for the future, just so that we can take practical things away from this webinar? If you can just give us your own strategies, I'll just want maybe 2 or 3, and then I can move on to Atinuke.
Okay. Thank you very much, Ngozi. So for me, I have three folds. So I have the triple pay. In fact, initially I had this savings plan for the kids I've had for years. And when the triple pay came out and I looked at the rates that triple pay was given, I collapsed those funds together. And then every month it gets deducted from my account by direct debit. So that's one way of actually saving, because sometimes you forget, and then before you know it, something else has come to take that money. But when you have a direct debit in place, it just takes it out before you even start spending. So that's one part of it. I also have a money market fund where a certain amount goes on a steady basis every month to that fund. So that just stays there. And then, of course, I'm sure that you know about piggy vest. That's another one that I save part of my money in. So those 3 buckets are just stuff where I put my money for. So every one of them, I think the one that I really, in fact, I pray not to touch is the one that has to do with the money market fund. But every other one, they have their own uses. So that's how I actually manage my investments.
Okay, thank you so much, Christian, for those direct and practicable things. So I'm sure that people have taken notes, and then we'll go and Google it afterwards and see which ones we can actually start taking part of. So I'll move to you, Atinuke. So I want to know your opinion on taking loans to meet family expenses. We've mentioned here that it's the cost of living has tripled, and a lot of people, their income has basically remained stagnant. So it's where are they going to get that money from to be able to even just live and survive? So we just want to know what your opinion is on people taking loans to meet their family expenses. Is it worth it? Is it something that anyways, yeah. Is it worth it? And I'm going to ask. And then basically, are there things that people should look out for before they take a loan? To just give people a guide, because I know I hear a lot of the time where people on social media, they are saying, I get some calls. I don't know who they are. They're calling me and they're like, this person has taken a loan and they've not paid. So it's just to understand things people should look out for before they take a loan, and is it really worth it for families at this point in time? Thank you.
Thank you, Ngozi. So in these times of our salaries not being able to meet our expenses, it's actually very important. All the points noted by Ifeoma, Chinweugo, and Christian are very valid. And as a matter of fact, that should have been the basis of anybody that wants to have a balanced financial management lifestyle. And of course, there comes a time where the need to borrow will come. But my suggestion has always been, and my advice is, when you are taking a loan, you are supposed to ensure that it is for a profitable venture, for something that there's going to be a positive outcome out of it. So that at the end of the day, when you see the fruits of the benefits accruing from taking that loan, it gladdens your heart that you actually made a good financial decision. So loans should not be that, oh, I want to use it to meet day-to-day feeding and whatever. That should come from actually managing your resources at that particular point. And like Chinweugo said, cutting out some things that we take for granted, and it will surprise you. If you sit down and look at your expenses, there are some frivolities that if you cut down, you will still be able to manage whatever resources that is coming to you as income or your salary. And then when it now comes to pay your children's fees, pay for your rent or something, something that you are pressed for, but it's not that you don't, or maybe you don't want to go and touch your investments, or something is not going to mature very soon. Those are times when loan is advised, so that immediately you are taking them. When funds now come, you can quickly liquidate those loans. And I want to advise, in taking these loans, we should watch out for, like you said, there are traps. There are a lot of financial institutions, fintechs, offering loans at ridiculous rates. And then, they mention 5% flat. You actually think it's 5%. No, if you analyze it, you're actually paying close to 60% or more per annum. So we should watch out. Even when you want to take loan, we should watch out and take medium or low rates priced loans, so that we don't, at the end of the day, sweep our investment away with paying high debt obligations. So that's what I would advise. There had been a time where I took loans in my life. There were times I took loans, but I can tell you specifically what I used those loans for, and I was better for it. So if you are taking a loan and that loan will not add, something valuable to you, then the purpose of taking that loan is not right. And then I think that is what we should look out for. Watch the rates, and then ensure that it is something that will, impact your life or the life of your family or your dependents or whatever the case may be. And then when Ifeoma spoke about money market fund, I'm actually only in charge of lending. So I think that might be a question for our team in United Capital and on all the rest that manage investments. But all the points noted by my colleagues are very, very, very valid points. Thank you.
Thank you so much, Atinuke. So I would just, I took notes. The first one is, you should not take a loan to eat or to flex. Only take it for profitable ventures. I think that's very, very important. Because I imagine taking a loan in January, you're supposed to pay in like June, and then you've been able to make some money out of that loan. So when you're paying back, you're actually seeing some sort of profit. So it kind of just makes sense. But I noted that you also said, like, there are some very key times where you have to pay your children's school fees or something like that. Those are very critical moments for families. So we also advise that we can do that. But I want to ask, is like someone who is listening now who wants to like probably get a loan from like UBA, do they just walk into the branches, or how does it work also?
So to access a loan in UBA, first you must be a salaried customer, and then of course you must be a permanent. Okay, so one of our criteria is that you are a permanent employee. No, you are not on contract or you are not all these paid, they just pay them monthly. How will I say? All these casual kind of things. So you must be a permanent employee of the organization. And for UBA, we have a scheme where we have counterparties enlisted. So we must, what it means is that your organization is an approved institution that UBA considers as, reputable for us to lend to their employees. So if you work for such organizations, what you just need to do is walk to any branch. Bring a letter from your HR or your admin or your payroll section confirming that, okay, so your salary will continue to be domiciled with UBA and all of that. And then based on the terms of our products, you can access a personal loan, asset finance, or whatever type of loan you want. So those are the criteria really. So, but the thing is that your salary must be paid through UBA, and then your organization will actually, send a letter across to us that, okay, we are aware this our staff wants to take a loan from you, will continue to domicile salary until he or she pays your loans. And that is what is really important for us, because that ensures that this person, as long as he continues to work with this organization, we always pay back the loan. So, and that is the comfort for giving that loan. Thank you.
Okay, thank you so much, Atinuke. So I have another round of questions. I'll address this to everybody. So I want to ask, what is one key lesson you want people to take away from this webinar? So everybody that is here, if you just want them to take away just one thing from this webinar, what would it be? So I will start with Chinweugo. What is the one lesson that you want everybody who is on this call to go away with?
Okay, thank you, Ngozi. I think for me, it would be discipline. So even though we all earn different things and our, responsibilities differ, just be disciplined, and where you can seek as much knowledge, just like Christian hinted, get the right knowledge with the discipline, towards what you want to achieve. You'll be able to manage your funds and subsequent investments.
Thank you so much, Chinweugo. Discipline. I'm also taking mental notes, discipline, because something that we all need at this point in time. Ifeoma, please.
I think what I want people to take away is that you don't have to wait till you have millions to start making investments and to start saving. If today you said, I'm going to start with 5,000, at the end of a year, you're sitting on at least 80,000. In 3 years, you're sitting on over 200,000 when it compounds. So don't wait, just start it. And you don't have to be married, you can be single, but just commit to bringing out something every month, and you'll be surprised when you look back 5 years, how much you've accumulated with so little investment.
Thank you so much, Ifeoma. So with as little as 5,000 is something that we can start doing. I know that even at Heirs Insurance Group, we have like monthly savings plans for 5,000 naira a month. So if you want to just start investing, it's something that we should look to. Thank you so much, Ifeoma, for that. Christian, please.
Okay, thank you so much, Ngozi. I think what actually I want everyone to take away from this webinar is that he who buys what he does not need steals from himself. So we need to understand that and actually practice it. So just ask yourself, what you're about to spend that money on, do you actually need it? And if you think you do not need it, just hold yourself back, and then you'll be able to save as much. And then, like Ifeoma also said, it doesn't have to be mega millions. It doesn't just start with it as little as I started with 10,000 then. And we just start with something as little as 5, 10,000, 15,000, and you'll be able to see something that will work for you. Little steps, baby steps, and you'll have something big in future. Thanks.
Thank you so much, Christian. He who buys what he does not need steals from himself. Nice. Thank you. Okay, Atinuke, please. What do you want people to take away from this webinar?
Okay, so for me, I just want us to note this booby trap of, as my income is increasing, then my lifestyle must also increase along with it. A lot of us, especially us that are working right now, when we get that promotion or we get that additional salary increase, the next thing, thank God, relief, I can buy this, I can buy that. No, that is actually the time you should save more. that is actually the time we should dedicate more and then put money in our savings and in our investment. It is an opportunity for us to save more and not to do what I call lifestyle inflation. We are complaining that we have inflation. We can also have lifestyle inflation. As your income is increasing, you're also increasing your expenses. So the more you earn, we should ensure that we save more, even much more than when we're earning less. Thank you.
Okay, thank you so much. I'll just go straight to the Q&A box. I have a few questions. I'll just take the first one, and it is directed to Atinuke, very specifically. It says, "Hi Atinuke, do you give loans to customers based outside Nigeria, but on full-time employment, and they have a good credit rating with Experian, Equifax? For example, loans to purchase properties or mortgages?"
Okay, so like I mentioned earlier, and that was why I mentioned the basic criteria. So you must be working in Nigeria, because that means your salary is paid in Nigeria, and then of course it's received through an account in Nigeria. So if you're outside the country, earning somewhere over there, how will UBA, get assurances that your salary will continue to be paid, and then they will be able to settle your loan? So the first criteria is that you're working, and you are working for a firm in Nigeria, and your organization also has that understanding that, okay, I'm obliged to send a letter to my banker or to my employee's banker when it arises that, okay, I'll continue to do salary domiciliation. So yes, we have mortgage loan, we have personal loan, we have asset finance, whatever loan you might need. But the criteria there is that your salary must be domiciled with UBA, so that monthly repayments, we are sure that when the time to deduct the loan repayment obligations from you, your salary has come in to settle up that loan. So that is a fundamental criteria that must be met. Thank you.
Okay, thank you so much. I will just go to Ifeoma on this, because you mentioned having investments in dollars. So I assume that this is something that you currently do. So someone is asking how they can go about investing in dollars based on your question. Thank you.
Okay, so first and foremost, obviously you have to change the money to dollars, and then there are quite a number of dollar funds that are around. UBA has quite a very nice portfolio that covers all sorts of, they've got their ethical fund, they've got their mutual funds for dollars and all that. So I mean, you can easily just try and call someone in UBA and there's a form that you get, you fill the form, you then pay in the dollars and they do the investment. Then you actually get an alert, a prompt that gives you, username and password to be able to check your fund, and you can literally, and you get quarterly statements and all. So that's really, it's, pretty just straightforward. Just change it. And then you look at the different funds, look at the, what goes into the funds, so, and then with that, you just make up your mind which of them that you want to go to. Yeah.
Okay, thank you.
And they all have minimum to come in. So the normal mutual fund, dollar fund is 1,000 now to join. But if you want to do like a euro bond or something, which is still dollars, that's about 20,000, if I remember, 20,000 to join. So most people start with the mutual funds, the dollar fund, which is 1,000, and then build up to when they can do a euro bond.
Okay, thank you so much, Ifeoma. I think Musi Essewe. So that was her question, or his question. Thank you. Then I have a question from Olubanke Akomolafe. She directed this to Christian. It says, "Hi Christian, what type of insurance products do you have? Do you have products like building, contents insurance, etc.?"
Oh, yeah, we do. Thank you very much. Yes, Heirs Insurance Group has all those products for fire, for burglary, for theft, for motor, for marine, depends for your business, group life, credit life, key man insurance, term assurance, and the product we'll be talking about, the triple pay savings endowment product. So we have several products. You can actually find all this information on our website. So once you go to Heirs Insurance Group or go to Heirs Life Assurance or Heirs General Insurance, you have all those information on our website. Thank you so much.
Okay, thank you so much, Christian. Okay, Chinweugo, I'm going to direct this question to you. It is from Nwanze Bunaya. So the person says, how, as a newly married couple, how do you handle a stubborn spouse to start saving and ensure that he or she doesn't spend it all?
Okay, quite interesting. So at least you could start by being the change agent. Will I say you are the first person to understand that you need to save, right? So even if the second person hasn't started it, you can be that change agent. You start out and start saving, and maybe come year end, for example, you are able to say, oh, by virtue of this, initiative I've taken on board, we were able to save so and so and so. The starting out is usually sometimes painful. It's a bit uncomfortable, but once you get into the groove, trust me, you would enjoy, and even your spouse would definitely see the benefits. Imagine maybe one day he's stranded and he knows how much you earn naturally, right? And then somehow you are able to meet a need that, just comes forth. He would look at you and wonder, how were you able to do that? And then that's the opportunity to say, it's that money that I put aside, month on month that you were, insisting that you are not interested in, getting involved in, that's the money that has saved the day. Trust me, that's the best avenue.
Thank you so much, Chinweugo. You have rightly said it's going to be painful at first, because why am I the one that is going to start saving my own money? So what will happen to your own money? So, but I think that, yeah, leading by example is something that's very key, so that they understand the benefits and then they're able to come on board, basically. So, well, even me that I'm here is doing me like, okay, so okay, I think that most of the other questions we have are on like savings and the investments. So what I'm going to do is I'm going to put phone numbers. I think the phone number for Heirs Life Assurance, Heirs General Insurance, so that you can call to find out like the different savings plans that we have for kids, investments for your kids' future, even for like different type of insurance plans. So if you call the numbers, we can basically guide you and advise you based on where you are right now in life, what best suits you, especially for your family. And so I'll just put those now in the chat so that you can just take it from there and you can call, and then we can move on from there. A lot of people are also asking for plans for how they can get loans from UBA. So what I'm going to do also is to put in UBA's customer care line so that you can be guided appropriately by that. Atinuke has helped us in just giving us like the basics, what you need to do to at least get a loan from UBA. So what I'll do now is I'll also put in their customer care number so that you can reach out to them and they will advise you appropriately. So I have sent it. I hope that everybody can see it now. I have put I replied to Olayinka Adebayo's question where I put the websites and the various phone numbers that you can call to get advice on type of insurance plans that will be beneficial to you. I just want to look through again to see if there's any question that we might have missed. Just give me a second. And also just to mention that a lot of us have been asking about the money market funds. We have a company in our group, which is called United Capital PLC. You can just take down the name United Capital PLC. They will guide you in everything that you need for your mutual funds and money markets. Just going through again. A lot of you are asking for the recording. Yes, we'll send you recording after the session to everybody who registered to attend. I think we have I think we've about covered everything. Yes, I think we've covered everything. Okay, so sorry for what's happening. Okay, I think that we have covered everything. So I would just say thank you so much to our distinguished panelists who joined and who have shared real life and practical tips on how basically you can manage your family's finances. And I think it went even more than just the family, because for me, I've also taken out like practical things that I can start to implement as I move forward after this webinar. So I'll just highlight the first one. We need to budget. It's very, very important. Ifeoma also shared like a draft strategy or a draft formula that we can use. 20% for feeding, 20% for shelter, 20% for investments, and then 40% you have for miscellaneous and other things that will come up during the year. But you know that this is not cast in stone. You can edit it based on your own income and based on every other thing that suits your own reality. We have, which is very key for you to take up like an investment plan. We had insurance plans come up, which is like endowment plans for your kids, saving for your kids' futures. And then also, just another important thing I need to mention is that what's very critical about insurance, I know that nobody prays for the unfortunate, for a spouse to pass away, for a parent to pass away, but what happens is that if you have like an endowment plan for your kids with an insurance, with Heirs General Insurance Group, Heirs Insurance Group, if anything happens to your kids, Heirs Insurance Group steps up and pays a lump sum towards like your child's education or something, whatever you have planned for that fund to go towards. So it's very important that we plan ahead for our kids' future. We also have like investing in other things like mutual funds. Ifeoma spoke about diversifying into dollar funds, and we also mentioned that you can get this from UBA or United Capital PLC. Chinweugo gave us a few things that we take for granted that are very, very important. Things like our electricity, our subscriptions, our data is something that we need to just track and ensure that we are not throwing a lot of money there. And then Christian also spoke about getting other kind of jobs online, just going online and looking for where you can get like remote jobs that don't require your physical presence, just to get an extra income to come into your account. And then he also mentioned something very important, which is direct debit. So just when you're saving, just ensure that you set up a direct debit so that you don't forget to put in your monthly contribution. They just take it for you. That's very important. And then Atinuke gave us all the insights that we need on loans. So basically told us that when you're taking a loan, you should ensure that you're taking it for a profitable venture, not to eat or to flex. And then she also gave us certain situations where families can take loans for their kids' school fees, to pay house rents or things around that. And then you should also make sure you look for loans that don't have high debt obligations. I think in summary, that is all that we have learned at this webinar today. So I want to say thank you to our distinguished speakers. I want to say thank you to all of you for joining the webinar. I want to say thank you to Heirs Insurance Group, your trusted partner for insurance, and to UBA, Africa's Global Bank, for this platform and for bringing together these speakers who have imparted so much knowledge on us. I think we have come to an end. I have put in the email, the phone number, and email for Heirs Insurance Group, so you can just go there and then you can on the Q&A box, you can get there and then you can call us or send us an email. Thank you so much, everyone. It's been an exciting 49 minutes. Thank you. Bye.